are you? And where are you going? What do you want?
Hello and welcome to Trust and Estates Weekly. I'm your host, Kevin Bemmel, and I'm here every Monday at 10 a.m. Pacific time to talk about estate planning and probate and trust administration, mostly for other professionals, but also for those of you who are dealing with your own estate planning, or maybe you've been appointed executor or executrix of an estate and you're trying to figure all this out and it's maybe driving you crazy. So, hopefully this will give you some thoughts on how to handle certain issues and if nothing else, allow you to excuse me, speak more intelligently to your lawyer and deal better with the court. It's the everybody's sick time of year. So today I'm going to be talking about undocumented loans. Are they loans? Are they gifts? What do you do about them? And it's not an issue I've heard discussed very often, and yet I think it's one that can cause a lot of consternation. And in fact, it falls into the basket of issues that have to do with people taking certain actions and not handling the formalities of them. And just because we normally don't, right? We don't worry about such things. And then the unexpected happens. In this case, somebody dies. And now there's a whole, potentially, at least potentially complicated issue that has to be resolved in the decedent's estate. So when I talk about an undocumented loan or an informal loan, what I mean is money transferred from one person to another, or it could be done in the context of a business, from one person to a business or some other entity. There's no promissory note. There's no repayment schedule or written terms. This is most common between family members and friends, although it can happen in other contexts as well. You've probably heard of, handshake deals, that sort of thing. And, then one party to that loan dies, and is it a loan? Was it a loan? Was it really a gift? Was it an advance? Was it an advance on an inheritance? How do we know? How does the personal representative for the estate, or for that matter, even the trust, how are they going to resolve that? So, what was just a matter between two people based on personal trust, rather than formal documents, now it becomes, like I said, at least potentially a problem. So the core issue here is without documentation, okay, the personal representative, that is the executor or executrix, or the administrator, or the trustee of a trust, okay, they have to try and infer what the decedent's intent was based on context, okay? And the burden of proof often falls on the person claiming that the transfer was a loan, okay? So if the decedent was the lender, okay, so the burden of proof is going to fall on the estate to prove that the recipient of the funds was a borrower and it wasn't just a gift from the decedent. On the other hand, if the lender was, let's say, a person and lent money to the decedent, okay, the estate is under no obligation to just declare it a loan. Okay, the burden of proof will probably be, I say probably because sometimes these issues get litigated, but the burden of proof will probably be on the lender, in this case, the third party who's still alive, to prove somehow that this was money lent to the decedent and not a gift or some other transfer of funds on their part. Okay, now evidence can include emails. Okay, emails, generally speaking, are accepted in court as evidence. It could include text messages, although it's less common for text messages to be accepted as evidence. There could have been a partial repayment of the debt. Okay, and in that case, canceled checks or at least bank records showing the receipt of funds might work. There could be some other kind of bank memo. There could be a witness who was there when the agreement was reached, and that witness can make a declaration of some sort, and that declaration, may stand as evidence that, in fact, the transfer of funds was a loan. Okay, now this list isn't exhaustive. It's just to give you some ideas on what may be, what may verify something as a loan. And by the way, maybe over the years, the decedent made a series of loans to the same individual, and there's a history of the making of loans and the repayment. Okay, and so if the estate is the lender in this case, seeking to get the money paid back from the borrower, and the borrower was saying, no, this one was a gift, or this was a gift, you might, evidence might be, well, why is this one a gift when there were 5 previous occasions over the last, 3 years where the decedent gave you money that was then paid back, right? So that may not be as strong as, let's say, a witness who was there who heard the decedent say, I'm going to lend you this money and you'll pay it back to me when you can, something like that. But it may still suffice it as evidence, or it may, maybe more importantly, it may convince the borrower that, in fact, look, you're going to have to come clean. These other ones were loans. This one obviously was too. So rather than fight this out in court, just, in essence, stipulate to the fact that this was a loan, and then we can move on from there and figure out, how you'll repay it. Okay. So when the estate is the debtor, okay, so a third party is claiming that the estate owes it money, okay, and this is whether it's a family member, a non-family member, okay, it could be some kind of entity, by the way, a so-called legal person, okay, if they claim it's a rightful debt, so the personal representative has an easy way of dealing with it, or at least at the beginning, there's an easy way to deal with it and say, well, you have to file a creditor's claim. Okay, and I did an episode on filing a creditor's claim, I think maybe 2, 3, 4 weeks ago, something like that. So I check out that episode and you can get an idea of how that process works. Okay, I talked about California, but the process is, I think, pretty similar in all the other 50 states and the territories. The time limits may be a little bit different. The form may be a little bit different, but in general, the process is fairly similar. Okay, so if someone is claiming that there's a debt, and it was an informal loan, but nonetheless a debt, so then the response is, well, file a creditor's claim. Okay, once the executor receives the creditor's claim, so then, once I should say the personal representative receives the creditor's claim, so then he can accept it, he can reject it, or he can negotiate the claim. Okay, and if there's no evidence that there was a loan between the decedent and the person filing the creditor's claim, the personal representative's probably going to reject it for the simple reason that uh, if he were to accept it, the heirs could rightly ask, on what basis are you saying that the estate is a debtor? You're essentially taking money out of our future and out of our inheritance by paying this, and you know the personal representative may be incurring personal liability by by agreeing to pay an unsupported creditor's claim. Okay, so claims without a claim for a debt without quote unquote proper documentation, i.e., there's no note or anything of a formal nature supporting it. Okay, they'll face scrutiny, but they can be accepted if they're supported by reliable evidence. Okay, and again, I talked about that evidence, so it doesn't have to be adjudicated by the court. If the personal representative thinks that the evidence is legitimate, so then the personal representative has a basis for accepting the claim, and on we go with the administration. Okay, so this is why, um, but this is why I should say I'm talking about this subject, because it's not nearly as straightforward as it would be if there was a note, for example, a promissory note. So I'll give you an example. I'm handling an estate where a couple of the relatives paid for the funeral service and committal. Okay. And they both separately sent me emails saying they wanted to be reimbursed. Right. And I said, gotcha. I said, just file a creditor's claim. Okay. And that's the appropriate process. Now, one of the reasons I did that is because there's a lot of heirs in this particular estate, and there's sort of two different camps fighting between them, right? So anything that I do needs to be properly documented. Pardon me, I may have cut off my last word. So anything that I do in a case especially where there's heirs in dispute, needs to be properly documented and needs to go through the proper procedures. So they both filed a claim. They handwrote the documents. That's fine. Does the fact that they weren't typed out doesn't really matter. But they provided receipts for what they're claiming, and the receipts appear to be legitimate. So I didn't reject the claims. I accepted the claims, and they'll get reimbursed. And in normal procedure, that's as it should be. Okay, no legitimate debt of an estate should be rejected. This isn't probate is not a function. Or function is the wrong word. It's not a process of just trying to act sharply, as we used to say. That's the personal representative's obligation is to collect the assets and collect and determine the debts and see that the debts are paid, and then the residual of the estate is distributed to the heir or among the heirs. Okay, so there's no requirement, for example, that a personal representative should try and get a debt, try and get out of having the estate pay a particular debt, even if the debt is legitimate. That's not part of what we do. Okay, um, so in a way, a personal representative is like a quasi officer of the court. And so there's a presumed truthfulness and good faith in their actions. Okay. So, let's take a break here, and we'll come back and talk about this some more. When life brings unexpected changes, managing inherited property shouldn't add to your stress. Magnum Properties specializes in probate and trust real estate management. We handle the complexities while you focus on what matters most. From property maintenance to tenant relations, from legal compliance to maximizing value, we're your trusted partner through every step. Magnum Properties Inc., turning property challenges into peace of mind. Call us today at 213-264-4396 or visit magnumprops.com. Okay, so we're back at Trust and Estates Weekly. I'm your host, Kevin Bemmel, and we're talking about undocumented or informal loans. So I talked about what they are and how, in general, they will probably be dealt with. Now I want to talk about some kind of specific cases or categories of cases, maybe a better way to describe it. So, first, let's talk about a situation when the decedent was the borrower. Okay, so the decedent owes the money. Okay, and someone else is seeking to collect it. Okay, now I'm going to look at both when the lender is a family member and when the lender is a non-family member. Okay, so one of the first issues that's often raised in the case of an informal loan is, and this is especially true when the loan was between family members, is uh, was it really a loan or was it actually a gift? Okay. And oftentimes, the presumption is because it's between family members that it probably was a gift. Okay. Especially if there's no documentation at all. Okay. Now, the size of it may uh, be a part of determining whether it was indeed a gift or a loan. If it was $100, I mean, was that a loan? Maybe it was if if the lender is someone who, doesn't have a lot of money. And so $100 is really a significant amount of money to them. And they wouldn't have given the decedent that money unless they knew that the decedent intended to pay them back, i.e., it was a loan, right? So context is going to matter as well as evidence, okay? But between family members, there is we'll call it a rebuttable presumption, right? That a transaction is a gift, not a loan. Okay. Now, non-family member lenders are more likely to be treated as true creditors because the arm's length nature of the transaction would tend to indicate that this was a loan. I mean, normally, non-related third parties uh, don't make gifts like family members make. Okay, now obviously there could be a difference if we're talking about a non-family member who is nonetheless a very close friend, okay, versus a non-family member who maybe they were a friend or an acquaintance, but there wasn't a very close relationship there. So the closer the friendship, the closer the third party was to the decedent, maybe the more likely it would trend toward this idea that it was probably a gift. And the less close the relationship would trend much more toward the idea that no, this is a much more likely to be a true loan transaction. It's an arm's length transaction, and the kind of presumption behind the evidence, assuming there is some evidence, right? That can weigh in and help the personal representative make a decision. Okay, so that's kind of one issue to look at. Another, again, would be whatever evidence is available. I've talked about, emails, text messages. Now there might, on maybe the money was lent by way of a check, and maybe in the memo, on the memo line of the check, it says loan. Okay. And maybe it's between two family, maybe it's between the decedent and a family member. Well, the fact that the person sending the check wrote loan on the check, and the decedent went ahead and cashed it and didn't dispute it, well, that would tend to indicate that it was a loan, right? I mean, and that would rebut the presumption that it was probably a gift. Okay, so that's a second thing to look at. Okay, and then witnesses, especially neutral witnesses who heard the decedent, maybe they heard the decedent acknowledge that it was a loan. Okay, so that's oral testimony, if you will, but it can be put down into a document. Okay, and the person can sign the document under penalty of perjury. They can even have their signature notarized, so that their identity is legally verified, if you will. Okay, and that could be strong evidence as well. By the way, there may be a neutral third party who heard that, no, this was a gift. Okay. And that neutral party may come forward and say, no, I was there when this was set up. And, Bob said he was giving the money as a gift to Susie. And so, now Bob is saying that that this was a loan, but I heard him say he intended it as a gift. Okay, so then again, that can be put into a signed statement or a sworn statement, and now you've got evidence to back up you, meaning the personal representative has evidence for making a decision. Okay, so why is this issue so important? Well, valid creditors get paid before beneficiaries or heirs receive anything. Okay, and especially if it's a large undocumented debt, that could have a sizable impact on how much the heirs receive once the debts are paid, right? And so that becomes a big issue as well. If the estate lacks liquidity, so then assets may need to be sold in order to pay the debt. So let's take a simple estate where, let's say there's just one heir, okay, and the estate consists of a house, and maybe the heir has let the personal representative know, hey, all things being equal, I would rather just have the house. I would rather the house not be sold. So maybe there's enough liquidity in the estate to pay the probate fees and to pay the administration costs and that sort of thing. But there's not a lot additional cash there. And then along comes this creditor's claim, and to pay the creditor's claim, there isn't enough cash because the cash that's available will pay costs of administration, which take precedence over paying creditors. Now the estate might be forced to sell the property kind of against the wishes of the heir. Now, the personal representative has that authority, but it's kind of a shame, right? That the heir is not going to be able to keep the house. Okay. Now, there may be ways around it. Okay. Maybe the heir is willing for a loan to be taken against the house to pay the creditor's claim, and then he'll inherit the house subject to that debt. That, again, there are ways that these things can be worked out. But the bottom line is creditors have a claim in priority higher than an heir, and so they have to be paid before the heir gets their share of the estate. Okay, and non-family members, okay, they, if they have what they believe to be a valid claim, so they're more likely to litigate rejected claims. Okay, and so these have to be dealt with carefully, because litigation is costly under any circumstance, whether it's with an estate or not. Okay. And on the other hand, a personal representative who mishandles such a claim, okay, could risk personal liability. I mentioned earlier, accepting a creditor's claim without any kind of evidence could result in the heirs holding the personal representative personally liable for the amount that the estate ended up paying, based on a breach of fiduciary duty. But as well, a non-family lender may also seek to hold a personal representative liable if they believe that their claim has been mishandled. Okay. So that's one side where the borrower, the decedent, is the borrower. Okay. Now let's look at where the borrower is an heir and the lender was the decedent. Okay, so now the estate is essentially sitting in the seat of the lender. Okay, so loans to heirs, now, assuming that, first of all, the estate is going to have to prove that if the let me take a step back. If the debt is not documented, okay, so the first step that the estate is going to have to take is to prove that it's a valid debt, okay, and not a gift, because family members do give gifts. Sometimes they're very large, but they're still gifts, okay. By the way, if there was some sort of gift tax return filed based on the money transferred, that would be evidence that indeed it was a gift. Okay. Whereas, and so there may not be anything, in writing, this is a gift to, my child or whatever. Okay. But it could be in the decedent's, prior year's tax returns, and it's documented there. That would be one place to look to see if indeed it's a gift. Okay. But let's say it was either too small to need to be documented in a tax return, or for whatever reason it wasn't. So the estate is going to have to determine whether indeed this money owed by an heir is a loan, a gift, or an early inheritance. Okay. Now, if the estate proves that it's a debt, okay, so it may be that rather than requiring the heir to pay it back, they'll just use it as an offset against that heir's share of the estate. So let's say that the loan is for, $10,000, and each heir is going to get and the overall estate is 300, or the overall, I should say, the overall amount available for distribution to the heirs is $300,000, and there's three heirs. Okay, so that means that each heir is entitled to $100,000. Okay, so how would the offset work? Well, the heir who borrowed the money could pay the $10,000 back. Okay, in which case that $10,000 is available to be split three ways. Or the heir's share could be reduced by 2/3 of the $10,000. Okay. And so that heir would get $93,333.33. Okay. And the two other heirs would get $103,333.33, right? And that offset would be essentially the repayment of the debt. Okay, if that makes sense. Numerically, if you write it down, you'll see it works out. Okay, so that's one way it could be handled, rather than, like I said, the borrower repaying the estate in cash. Okay, Now, what becomes problematic is where the borrower keeps asserting it was a gift, and the other heirs keep, they assert that it was a loan, right? And it's easy to see why, because they're saying, wait, this was not a gift, you know and it could be exacerbated by the fact that maybe the borrower is viewed as mom's favorite, right? And now mom is gone, and the other two siblings, maybe it's three siblings, they're finally going to get their revenge, on the favored child, right? So even though in their heart of hearts they may believe it was a gift, they're just, from their perspective, tired of, the baby of the family getting special treatment. And so, they're going to, push very hard to force to have the money paid back. Okay. And so this is the kind of conflict that comes up in the administration of an estate that makes the personal representative's job more difficult. Okay, so the bottom line is these kinds of conflicts where an heir is the borrower, minimally they can cause conflict, and they can cause delays in the estate being administrated, and even if the amount is large enough, they can lead to litigation. Okay, so let's take another break. Probate and Trust TV, your curated source for the most useful and insightful content on estate planning and trust and probate administration, featuring standout professionals like Bill Gross, Paul Brabelet, James Cunningham, and yours truly. Whether you're a lawyer, accountant, real estate professional, or working on your own succession plan, this channel helps you quickly find the clearest, most practical content YouTube has to offer. Subscribe now to Probate and Trust TV. Spend more time learning, less time searching. Well, so we're back again with Probate and Trust TV. Probably listen to me with Trust and Estates Weekly. And we've been talking this morning, or today, I guess I should say today, because it's not morning on the East Coast, about informal or undocumented loans. I talked about a couple of, a couple of specific cases. I want to talk about a third case, and then we'll kind of wrap things up. So I want to talk about a case where the borrower is an unrelated third party and the lender was the decedent. The case I just talked about was when the borrower was an heir. Okay. Now the borrower is an unrelated third party and the lender was the decedent. And so now the estate purportedly is the creditor. Okay. And how is that going to work out? Okay. So part of the personal representative's responsibility, as I mentioned a little while ago, is to identify all assets and debts of the estate. So if the estate is owed money, that is an asset. Okay. That debt, that loan is an asset to the estate, even if it's undocumented. Okay. So the personal representative may need to review bank records, emails. He may get wind of some, discussions that X person or X entity owed money to the decedent. Okay, and he needs to follow up on those. They can't be just there's no documentation, I don't need to worry about that. That would not be proper on the part of the that would not fulfill the fiduciary obligation of the personal representative. Okay, so they'll need to minimally investigate and find out if there's any legitimacy to what may be nothing more than a rumor or an email. Okay, if the personal representative believes there is grounds that a debt exists, so then the estate needs to pursue repayment like any creditor would. Okay, that may require demand letters, negotiations, even litigation. Now, if the debt is small, litigation may not make financial sense. I'll give you a very teeny example of this. One of the duties of the personal representative is to search for unclaimed property. And here in California, and this is true in other states as well. I know I've done it in Alabama, and trying to think. I think there were a couple of other states where I did it as well. Maybe. Anyway, you can go online and you search the decedent's name to see if anything is owed to them. Okay. But what I found at least a couple of times in California is the process for claiming unclaimed property includes sending in a form that's been notarized. And oftentimes the cost of notarization is more than the property that could be claimed. And so, that being the case, it doesn't make economic sense. It doesn't make sense to spend, $100 in notary fees to recover, $3.28 in unclaimed property. Okay. Likewise with litigation, right? Litigation is costly to the estate. If the debt is, a few $100s, while litigation could be pursued, it probably doesn't make sense from a business standpoint. Okay. Now you say, well, sue to get the legal fees recovered. Well, okay, yes, but in most jurisdictions, you don't get all your legal fees. So, if it costs you $25,000 in legal fees to recover a $10,000 debt, and you got $10,000 plus half your legal fees, which isn't unusual, you recovered $22,500, but you spent $25,000 to get it. So, therein lies the challenge. But any way that it makes financial sense for the estate to pursue the debt, the personal representative should pursue it. Now, one of the challenges is that third-party borrowers often assume that a debt essentially died with the lender, and this is not correct. The decedent's estate becomes the creditor in that case. A debt does not die in that context. Okay. Now, maybe there was some provision that said, if I die before you pay the money back, then I intend to forgive, or I'm going to forgive the debt. Okay. Maybe there's some kind of email to that in that respect. And so in this case, the unrelated third party could present that email to the personal representative and say, hey, this is what I was told. Yes, it was a loan, but the decedent said to me that if he died before the money was repaid, he would forgive the debt. So I don't see where I'm required to repay this money. Okay, so there you go. I mean, there's all kinds of permutations that I could come up with, but these are the kind of things that need to be investigated and pursued. Okay. Now, if the decedent lent money informally once, well, it may be that he did so more than once. Okay, that may be the way the decedent handled that particular type of transaction. Okay, and the personal representative's duty is to act diligently to preserve the assets of the estate, and that would include collecting valid loans. So this can't be something that's just left to sit, and then the loans become uncollectible. Okay, so best practices, first of all, to prevent these problems. First of all, anytime you're going to borrow or lend money, there should minimally be a note. okay, to prevent these kinds of disputes. Okay, so I know that over the last kind of year and a half, maybe almost 2 years now, um, for personal reasons that I won't get into, I borrowed money from a couple of friends of mine, and they were perfectly content to, give me the money, and they trusted me to pay it back and all of that. And I said, like, I appreciate your trust, and I'm going to give you a written note. Okay. God forbid I were to die without, before I paid you back. So, you could potentially have difficulty collecting the money from my estate. And I don't want you to have that difficulty. You shouldn't have to, uh, you know, go through a lot of trouble proving that you have a valid debt. Okay. And I think, and I, in some ways, I think it's more important to do that with friends, because presumably we care about them more than we care about sort of, not strangers or acquaintances. Okay. So business matters between friends should be handled in a business like way. And if you have a friend who doesn't want to handle something that way, then maybe you want to give second thought to whether you're going to do this. Or if you are, let's say you have a friend, you've agreed to lend them some money, and but they don't want to sign a note. So then maybe rethink it, or maybe just, okay, so it's not going to be a loan. Maybe just decide it's going to be a gift. If they happen to pay it back, well, you got lucky, but otherwise, don't bother. That was my policy for many years, for small amounts of money. Um, Somebody say, can I borrow $100? You know what? Look, here's the $100. If you want to pay me back, fine. But as far as I'm concerned, it's a gift. And that way, you're not going to potentially damage the friendship. There's no need for dispute or whatever. Okay. Um, Even if you don't do a formal note, and these days it's so easy, you can just find them online. But at least do an email that acknowledges the debt, and what the terms are, and what happens upon the death of the lender or the borrower. Okay, and just specify that. Put it in an email. You know, one party sends it to another with the request that they acknowledge receipt back. Okay, and that can be perfectly fine in terms of documentation. Okay, if there's any change in circumstances, update the change, document it if part of the note was paid back but not all of it. Okay, so create a new note and cancel the old one, or something like that, or give a receipt for the part that was paid back, so that maybe the personal representative, hey, he sees this note for $10,000, and he sends a demand letter to the borrower for $10,000, and the borrower can say, hey, here's a receipt showing that I paid 5,000 of it back. I only owe 5,000 more dollars. Okay, or something like that. Again, they can be relatively simple. They can even be handwritten. Okay, but at least document them. Okay, and the final thing is, talk to family members. Okay, keep them aware of what's going on, especially if let's say you're the parent. So it's more likely that parents predecease their children. So keep the children advised. If you made what is considered a loan to one child, okay, so A, document the loan, and B, let your other children know you made this loan. On the flip side, if you gave a gift to one child and you don't intend it to be a loan, document it as a gift, okay, and let the other children know. Okay, I don't want there to be any dispute about this. It's my money. I can do with it what I want. I've given, Tina a gift of $10,000, and I don't want there to be any dispute over this after I die. I gave it to her freely. This is not intended to be paid back. Okay, and that's simple. Okay, your children may not like it, but they're better off knowing the situation than being in a fog once you pass away. Okay, So that's kind of my business advice, if you will, about dealing with informal or undocumented loans, and hopefully it'll help you administrate them better, and hopefully it'll help you deal with disputes should they arise. So let's see, coming up tomorrow at 10 a.m. Pacific time, my show, Business Lessons from the Military. On Wednesday at 10 a.m. Pacific is my show, People Making Money. And on Thursday at 5 p.m. Pacific time is my show, Jiggers' Place. We'll have a cocktail and a schmooze as we head to the end of the week. So I thank you very much for joining me, especially my live viewers. Always a treat. If you have any thoughts, comments, questions, criticisms, links to the show, links to social media will be in the show notes. Always glad to hear and if appropriate, respond to your comments and criticisms. And that leaves me just to say, once again, thank you so much for watching. Signing off as I always do. Marie, darling, you are my belle. Courage at all times, my friends.